Our today's topic is chart of accounts. Have you ever imagined how buildings are constructed? Yes, we need a lot of building materials and building blocks. Similarly, to create and run an accounting system, you need to have a kind of basic structure or building blocks in the form of chart of accounts, journals, ledgers, etc. So our focus of attention today is chart of accounts. A chart of accounts is a fundamental accounting tool or structure that provides a complete listing of every account in the general ledger broken down into subcategories. To understand chart of accounts properly, let us think of a book. Then think of that book being organized into chapters, and then think about a table of contents. The words in this book are like your accounting data in your general ledger. And these chapters in the table of contents are like accounts or subcategories of your general ledger. Therefore, a complete list of these accounts collectively is called chart of accounts, similar to that of table of contents in a book. Let us now look at summary income statement or P&L. This gives us very high level information about total sales, total cost of goods sold, total expenses, total gross profit, and total net profit. Is this information sufficient for me to run my business? Certainly not. I need to know how much expense I incurred on rent, audit, insurance, staff, distribution, and so many other categories. Similarly, I need to know the assets I own, the liabilities I owe, and the capital I invested, but the summary balance sheet doesn't tell me much. More granular information is only possible if I break up these summary numbers into smaller subcategories. Let us see how a chart of accounts answer all these questions. Each business may have its own chart of accounts according to its own information and business requirements. Let us try to create a chart of account for a small trading firm. First, we have to think about high-level classification or categories, how we want to organize our financial data. Then we will assign a unique numeric code to each of these categories to distinguish these from the rest. For example, we can assign 100 to current assets, 200 to long-term assets, 300 to current liabilities, 400 to long-term liabilities, 500 to equity, and 600 to revenue, and 700 to expenses. Having created these high-level or summary-level categories or classifications, we are now in the position to create subcategories. We call them accounts. We will then assign a unique 6-digit numeric code to each of these accounts. Then anybody looking at our chart of accounts will immediately know that a code starting with 100 or an account starting with 100 represents current assets, 200 represents long-term assets, and so on and so forth. And this is a very logical way of creating a chart of accounts, and this helps with computerization of our accounting system as well.